Well, hello folks, and today I want to educate you a bit about some things that I've been seeing lately with folks that I've spoken to inside of my office and outside of my office. I have seen or have been seeing people again getting a little too comfortable with our current economy and forgetting about the events of the recent past. Although we are definitely in a roller coaster economy with many ups and downs and some, of course, areas of uncertainty, there are many positives that have occurred since the great collapse of 2008. At least in my circle of clients, prospects, business people that I associate with, business and jobs have improved some. Markets are way up since 2008, where most of you clients, especially who stayed invested, which all of you did, through the downturn, have almost fully recovered their losses in their equity portfolio. In addition, we are probably getting a little bit more comfortable with our current situations in our lives and our economy. So what has me concerned is that what I've seen is that we're getting more comfortable again. This is the problem. I'm starting to get asked some questions and watching as people begin to start behaving badly again. Remember that it was many of the mistakes I see people committing now that were the very same ones that caused them to get into trouble in the past, just within a couple of years. Okay? So we seem to be letting our guard down and believing that, well, this time it's not going to happen, or that won't happen to me, especially not again. Well, I'm here to tell you that there are some very serious threats to your financial security that most people pay no attention to, that they really need to pay attention to. Folks, I'm here to tell you as a financial advisor, investor coach, financial planner, there's no magic. There's not magic that we as financial advisors can do, or really anybody can do. There's just careful planning that needs to be done always, and also having a complete understanding of risk. So instead of going into a grand list of items that can threaten your financial security, here are 3 areas that can easily be fixed and probably make you feel more comfortable into the future. And the first is not enough cash. Folks just don't seem to have enough cash. One of the primary rules of financial planning is that you have cash on hand for emergencies. And these emergencies are not only loss of job or getting hurt or sick, but simple expensive things just like broken air conditioner or even a roof leak, whatever it is. Now, the usual rule of thumb that you hear out there is to have 6 months of living expenses stashed away in a very safe place like a money market or a high-yielding checking account. However, please note that 6 months to me is kind of just a starting point, and there is a lot of room for discussion here. But some factors such as occupation, age, stage in life, comfort level, and many other issues are essential in determining just how much cash to have on hand. In addition, I know that the rates stink right now as far as interest rates, but that's no excuse not to have cash. Think of cash as a cheap insurance and do it. Carry enough cash. The other one is especially for younger families, is not enough life insurance. That's number 2. This topic is near and great to me because as a child, I was raised on life insurance as my father passed away unexpectedly of an accident at a young age. Interestingly, though, when my father passed away, 45 days after obtaining life insurance on himself. So, the American Council, one of the things that we read all the time is that the American Council of Life Insurers states that the average family carries about $196,000 worth of life insurance. And you know what? This number is actually right spot on as I've lived it and seen it with people that I've counseled in the past. With that amount of life insurance, folks, you got to think of it. With that amount of life insurance, if your spouse were to pass away, okay, investing that money conservatively would earn the beneficiary about $2,000 to $3,000 a year, or about $200 a month. And what you really have to ask yourself is, the real question is, would your family be able to make ends meet on $200 a month? You can see right here, your standard of living would be severely impacted. So that one is not enough life insurance is one that's easily fixable. And the other one for folks that are 55 and over and getting ready for retirement is, you got no long-term care insurance. Long-term care is so important to plan and consider. If you and your spouse, ask yourself this: if you and your spouse got sick and needed care in your home or someplace else, guess what? Medicare doesn't cover it. Okay? Your Social Security doesn't cover it. You got to think in your head: would your finances be able to handle another $50,000 to $70,000 a year in additional expenses? I would venture to say that the answer is no, which means that if you're 55 plus, you have to have a plan in place to cover these potential expenses, whether it's insurance, whether it's going out and getting a long-term care policy, or making sure that you have enough money in your plan to self-insure. So remember, these are just some of the most basic threats to your financial security you might not be paying attention to. But I'm here to tell you that one needs to be prepared, because you just never know when that meteor is going to hit. Okay? These are simple steps, simple things that you can do that will go a long way in helping you feel more comfortable with your financial success. Talk to you next time.